Good morning, everybody. Hopefully, y'all are having a great Monday. I know that I sure am, even though wasn't quite able to dunk this morning. I did end up touching the rim the other day, but feels like my knees just are giving out on me at the early age of 27. Once you get to my age, you just forget to count. But hopefully, y'all are having a great Monday. Good morning. And let me link the Discord, the premium Discord, and everything over in the chat. So if y'all want to see the trade alerts whenever I'm not on the stream after 10:30 in the morning, you can check out the premium Discord, which I will find the link to right now. Here we go. Good morning, you're fun. And then also, link to the free Discord so y'all can come and chat it up with me outside of this live stream. And then we'll get started. Going over some previous trades that I made last week and looking at the good old spreadsheet. Alright, there is the link for the free Discord. And let me pull up the nice spreadsheet to see how we ended the week last week. So if we go to my January log, actually the January calendar, I ended up taking $230 of profit on Friday, which is a little bit disappointing, honestly, because I had made about $400 from Netflix by itself. So I ended up giving back, I guess, around, $170 or $200 or so, which, it happens. But overall, last week was fairly good week, hoping for the same this week, hoping for a positive end to January. So far, I'm up by $413, so an average of $137 a week. Big losses last week, and this is something that I wanted to touch on before we get into our live session, something that I might post a short video about. Not sure if y'all want to see more of the shorts videos or not, but I was recording a shorts video talking about how if you're not in the right mindset to be trading, if you're in an argument with your loved one, or there's just something going on in your life, then sometimes it's best to not take a trade if you're not really ready. Because I felt like a couple weeks ago, whenever I was taking these large losses that led to a negative $1,300 week, I just wasn't in the right mind space. And, I could have cut my losses shorter, but I just had other things that were on my mind. So if y'all want to see those short videos still, let me know. But yeah, that's just a little tidbit that I wanted to give you this morning before we start trading. And for my analysis this morning, I am bearish to neutral. And we'll read through my analysis over on the calendar. The spreadsheet is only available to the premium Discord. Again, that is linked in the regular Discord and on top. But the sentiment for the day is bearish to neutral, and my reasoning for bearish is because the dollar and rates surprisingly are going up today, even after Fed Collins came out and said that they're in favor of a 25 basis point rate hike. But we need to make sure that Fed Collins is a voting member of the Fed to see if that really even matters what's coming out of their mouth. So we'll go over to the Fed Hawks and Doves cheat sheet. Oh, I'm doing great, Nate. Thank you. Hopefully you're having a great Monday, too. Shorts all day? All right. We got a 50-50 split on red or green today. So maybe it's the neutral. That'll be right. Anyway, so it was Fed Collins, who is not a voting member. So what they say really doesn't matter because they don't even get to vote what the interest rate hike is going to be. But they are in favor of a 25 basis point rate hike. Now, I would be more concerned if we saw more of the hawkish members of the Fed, say Fed Williams or Kashkari, Waller, one of those members, if they come out and say that they're going with a 25 basis point, that would be a negative. Or that would be a positive for the market, but a negative for the bears. So, right now, we're headed up. We ended up, I guess, bouncing on that 395.78 mark. We got the mother of all trend lines over top that started at the end of the bull market. And then this one way down here is starting from the bottom of the 2009 or 2008 crash. So still a long way from there, but we're edging super, super close again to that very important trend line, which I think will probably act as a resistance. We don't have any majorly good news. We do have earnings coming up, which is why you clicked on this video. And if y'all watched my latest video, you'll see how exactly I analyze earnings. I might do another earnings analysis this morning. I would like to do Microsoft if we got time for it. It takes me about 20 minutes to go through the entire analysis roughly. So you'll have to stick with me, and if you don't want to watch that, it's fine. But I will link this. This is how I perform my analysis specifically for Tesla, but this is like the framework of how I do an earnings. So I start with a price analysis looking at price levels from the daily and the hourly charts. Then I go to an earnings analysis looking at past earnings over the last 8 quarters, taking the average, looking at Wall Street estimates. Is Wall Street estimates above or below the average over the last 8 quarters? And seeing what sector that company is in to get a gauge if they're going to do better than average or worse than average, and then compare that to Wall Street. So basically it's a gauge of whether the company is going to beat earnings or miss earnings, or, come somewhere right in the middle and meet earnings. But markets are about to open. My ears are about to get blasted, so let me mute my computer right quickly. Good morning, Guile. But I'm currently looking at a put debit spread. Looking to open this probably first thing this morning. The RSI is telling me no, though. The RSI is currently at 60. So if it's above 50, that's bullish. So maybe we can wait it out a little bit. But these are going for pretty cheap. They're only 35 cents at the moment. So I think I was planning to get them for anything under like 40. So I think I'll snag them up at 35. And I don't want to spend a lot on this. Maybe just like 10 of them. Oh man, the bid ask is moving very quickly on me. God dang it, I'd already moved up to 40 cents to open this. But yeah, I think we're going to 395 and below today. I ended up getting those at 38 cents, so I'm assuming we're probably going to head down to this 395.78 price level again. And then this 394.50 price level is where I'd like to exit below if we can. But let me post that over in the trade alerts. That's the first trade of the day. Again, my analysis for today is bearish to neutral. Let me check the poll, see what y'all think. Just opened a new SPY put debit spread. This expires today. This is a day trade. 123, and I got them at 39 each. And my strike prices were 395, 396. I typed those backwards, but analysis and morning analysis. Assuming SPY may drop to the 394.5 price level based on higher rates and higher dollar so far this morning. We're right at that 395.78 mark, which we used as support before. Looking at the call debit spread that I just opened right now, they're up by $30, which not a bad trade if I want to make a quick snap profit. But let's see. Right now we're just below 50 on the RSI. We just bounced off that 395.78 price level. So we'll see if we follow through with it or not. We'll check the technicals one more time. So the reason why I'm bearish for today is based on the 10-year Treasury yield going up by 1.3%, from a close of roughly 3.48 to 3.53 this morning. And then if we look at the dollar UUP, which isn't exactly the dollar, it's actually a derivative of the dollar. But let's see. Looks like those call credit spreads that I actually opened. Whoops. Meant to cancel that order, but that's okay. Right now, 395, 396 buy. Okay. But yeah, looking at the dollar, it's at 27.50 right now, and it closed the day at 27.45. So slightly up, not a lot. And it does seem to be coming down, which may be a bullish change for the stock market. Let's see. But currently hasn't moved a ton just yet. Try knees over toes for stronger knees. I'll try that. I feel like it's always the days after my squats that my knees are just like aching like hell. For some reason, like the squats, especially front squats, is what kills my knees like hell. It's like I get a lot of pain right where, I don't know what the muscle is called, but the kind of teardrop muscle, basically. That's where I get a lot of my knee pain, right around there. But yeah, I'll try knees over toes. Gave up on squats after my lower back injury. Yeah, lower back injuries are a pain in the ass. This is not what I need. Let's go to Robinhood. All right, so currently down $100 today. I opened a Tesla call credit spread in my last video. I meant to cancel it before, but I guess we opened it anyway. So if you'll watch my last video, you'll know why I opened this. But my analysis basically was that Tesla, I think they're going to beat on their earnings per share, but I don't think it's going to be a major beat. And Tesla investors are used to Tesla blowing earnings out of the park. So given that, I think that Tesla may go up a little bit, but it's not going to go up a ton. So right now it's trading at 136. I'm assuming that it's going to stay below 142. And then for that put debit spread that I opened for SPY, it just turned around right now. We went all the way down to 395.87 and then bounced back up. So kind of just hovering between 45 on the RSI, and right now we're at 52. So maybe today is the neutral day instead of a bearish day for us. So we could use that as a hedge, do a iron condor possibly. I would rather do an iron butterfly personally, and assume that we're probably going to be maybe in the middle between the 396 mark right here and then the 398 mark, which is the end of the day and the end of the trend line at 398. So maybe we call it 397 to end the day, and that would kind of hedge us on the upside too. That would be slightly positive. So let's do a iron butterfly, assuming that we're going to be at 397. And I would probably give it $3 in either direction, so we'll call it 400 for the call and 394 for the put. That one we get a total credit of 192 for $300 of collateral, so our max loss is 100 for that trade. Looks like we're coming down to that 397 or 396.78 mark again and bouncing off of it. So let's try to get this trade in for the Iron Butterfly. 189 is what we're looking at for the price on it. Gonna have to keep dropping the bid. I don't know, at this point you're taking on a little bit more risk, so it might not necessarily be worth it. Let's see. Alright, so I opened the Iron Butterfly assuming that we're going to be 399 or 397 to end the day. So I will send that through the premium Discord. Again, if y'all want to see the alerts that I send out after the live session, if I'm not here to close these or if I'm opening a new trade that's not during 9:30 to 10:30, join the premium Discord. But just opened a new SPY Iron Butterfly. This expires today, so it's a day trade. 123 expiration date. And I got paid 188. Strike prices that I chose. There's a $3 difference on either side. And I'm assuming it'll be 397. Um, 400. There we go. Okay. So that will be kind of acting as an upside just in case the put debit spread doesn't work out for us. We should make some profit as it approaches 397 if it does end up making its way up today. But again, bearish to neutral today. Neutral because there's no economic data that's come out over the weekend to suggest that interest rates should go higher. So we could see a pullback for the 10-year Treasury rate, which we're starting to experience already. And then the dollar was up this morning, currently still up. So as long as these two are up, fundamentals are pointing down, which is why I'm bearish. So as long as these continue, that would be bearish. But if they end up pulling back or staying the same, then that would be neutral for the market. What do I think of SPY today? S&P 500, bearish to neutral. All right. 10-year Treasury yield. All right, so the Qs are actually up by 0.5% today, surprisingly, with the 10-year Treasury rate. That's unusual. QQQ. Usually whenever the 10-year Treasury rate goes up, that means that growth takes a hit, but that is not the case for today. So maybe the markets are rallying ahead of tech earnings, which is coming up for this week. We have Tesla, we have Microsoft as the two biggest names, and I do want to do an analysis for Microsoft before we open a trade on that. So I've already started the price analysis part by going to the yearly chart, one-day chart, and grabbing some price levels from either gaps in the market or candles of significance. Like this candle is much larger than usual candles around it. So I take the close and the open of it, divide it by 2, get the average. Another gap here, another candle of significance, another gap, another gap. So those are your supports at 235, 231.65, and 227.05. Resistance at 244.10, 252.53, and 259.76. And then I also go to the hourly chart, so the 20-day hourly chart, and I do a price analysis on here as well. So I'll usually pick price levels that are somewhere in the middle between the price level that I already have from the daily chart So this closing price right here at 239.11 would be suitable. So 239.11. Add a 1 on the end of this, and then I'll usually make it blue just to differentiate it from the dailies. Not necessary, but something that I prefer to do. I don't want to set them too close together because it's just kind of redundant. But looks like there's another one right around here at the close of this day on 1/4. The close was 229.10. And those will probably be the only price levels that we can get out of the hourly chart. So 229.1. This will be blue again because it's an hourly instead of a daily, which are yellow. So now we have a support at 239.10, 235, 231.65, 229.10, and 227.05. Right, so got all our price levels set. Now I want to do an earnings analysis. So the way that I do my earnings analysis, this is Thinkorswim that I'm using for the platform. The way that I do my earnings analysis, I'll go to earningswhispers.com, and then I will pull up another tab where I search for Microsoft earnings history. And the website that I prefer to use is MarketBeat. So if we go to Microsoft, Wall Street expects them to come in at 229 earnings per share, and then $53.48 billion. So I'm going to take a note on this. Add a drawing note. Let me double check the numbers. 229 earnings per share, 53.48 billion revenue. And this is Wall Street. It was 238 earnings per share, I believe. Let me double check. 229 earnings per share. I'm terrible with remembering numbers sometimes, but 229 earnings per share based on Wall Street estimates. All right, and now we want to find the average. So if we go to this marketbeat.com, I'll link this. I'll link both of them actually. And scroll down. Actually, this is not the right page. Scroll down here. We'll get this nice little table that'll show us the earnings per share, the historical earnings per share. So I'll go down 1, 2, 3, 4, 5, 6, 7, 8 earnings. So that would be the last 2 years of earnings, which is a good proxy because tech has been doing really well over the last couple of years due to the pandemic and the flood of money that came with that. So 203 was the beginning, 195, 217 earnings per share, 227 earnings per share, 248, 222, 223, and then 235. So the earnings per share started to slow down roughly at the beginning of 2022. And then it was 235 was the last report. So 1770 earnings per share over the last 8 quarters. You divide that by 2. You get an average of 221 earnings per share. 2.21 EPS. This is the average. And now we'll take the average of the revenue over the last 8 quarters as well. So 1, 2, 3, 4, 5, 6, 7, 8. 4308 is the start. 308, 4171. All right. 46.15, 45.32, 51.73, 49.36, 51.87, and 50.12. Make sure that's right. 379.34 total. 379.34 divided by 8 comes out to an average of $47.42 billion. $47.42 billion revenue average, versus Wall Street is expecting 53.5 basically. So they're expecting an increase of earnings per share based on the average of 6 billion out of 46 would be 1 over 6. 1 over 6 would be 16% increase in revenue based on the average, and then 8 over 221 would be a 4% beat. So they're expecting margins to shrink if they're expecting revenue to go up by 6% and earnings to go up by 4%. If margins were to stay the same, they would be equal. But since the earnings is lower, that means they're expecting margins to shrink, so making less profit per dollar that they come in with. But the last earnings per share came in at $2.35. Last revenue came in at 50.12. So they're expecting still a record revenue and, well, not a record. Yeah, actually that would be a record revenue at 53.5. So that one I think is a miss waiting to happen, especially since their revenue has slowed down over the last few quarters. I would think they're going to miss on the revenue. And then for the earnings per share, it came in at $2.35 last time, and Wall Street is expecting $2.21. So I think it could be a small beat on the earnings per share, a miss on the revenue, and then it's all about guidance. So guidance you can't really predict too well because it's based on whatever the executives think the company can do. So can't really predict that all too well. But based on a miss on revenue and a beat on earnings, I would think, let's see. Let's go to the yearly chart, see where it's trading. It's trading kind of in the middle, in the range that they've been in since September. So if they beat on their earnings, I think that's going to be the headline. So it could possibly make its way up to the kind of top half of where it's been over the last few months in September. So for me, I think I would be willing to put on either a put credit spread or maybe a call debit spread, assuming over 244 if I were to do the call debit spread, and then a put credit spread, I would probably say it'll be above 235 or 232 if you want to be safe. Their earnings is scheduled for, I think, tomorrow, 124. And the last thing that I like to look at too is IV percentile. So looking at where the implied volatility has been over the last year and where it's trading right now. So currently the IV percentile, implied volatility percentile, is 39, which means that 61% of the time implied volatility has been higher than it is today, right before their earnings report. And usually before an earnings report, you see a decent spike in their IV percentile, but that's not what we're seeing for a lot of companies across the board. There's not a lot of IV baked into any of these earnings, which is how I was able to double my money on Charles Schwab last week, because implied volatility was so low at like a IV percentile of, I think it was like 1. So IV was the lowest it had ever been right before the earnings report, which made no sense. So I ended up buying a put option on it, super cheap, ended up doubling my money because it moved more than the markets had expected. So that's one way that you can kind of take advantage of low IV, especially for this earnings season. It just seems to be so common. Another earnings for this week is Visa, and their IV percentile is 12. So that means 88% of the time implied volatility has been higher over the last year than where it is right now. And their earnings is scheduled for Thursday of this week. Given that the stock is trading so high, with the 52-week high at 236, currently they're trading at 224, and given that retail sales came in pretty bad for December, which is usually the hottest month in terms of sales, I think that Visa is going to have a bad earnings report. I think they're going to have a pretty significant sell-off, if I had to guess. And I would think that they would probably come below, I'd say 220-ish would be my guess. So depending on how expensive a put option is, that's probably what I would buy. A put option, assuming that they're going to be under 220. So a break-even price of 220 is what I would be looking for. SPY, currently trading at 398. So losing money on both the iron butterfly and the put debit spread at the moment. But checking in on this Visa. A put that expires for this week, you're looking at spending about $500 for a put option with a $220 break-even price. I would assume probably worst case scenario, Visa goes all the way down to like 215, and I'm looking at the 225 put. So that would have about $1,000 of intrinsic value, so you'd basically double your money with a 225 put. I'm going to wait until the end of the week, though, right before the earnings, just because if we have a good earnings out of Microsoft, Tesla, then Visa is probably going to go up with it, and I would rather short it whenever it's at a higher price and short it whenever it's at a lower price in order to potentially make more profits. But looking at the markets again, looks like QQQ is up a whopping 1.1% today. So even with the 10-year Treasury yield on the climb this morning, the growth market is just closing its ears with the earnings this week, I guess. But again, we have that overhead trend line for SPY that I would be worried about. I think we're right at it right now, if I had to guess. Yeah, we just broke above it, so that could be bullish for the market right there. Could see us go to 398.50 pretty easily, but we'll see. I would think that would be a pretty significant trigger to the upside, so maybe time to close out of the put debit spreads we got, assuming that SPY will go to 395 today. That one we're down by 230. I ended up paying 38 cents, so probably overpaid for it. Kind of wish that I was able to get it cheaper, but let's see. Get rid of this. 398.21, so we're definitely above the trend line. Looks like we might be headed to another new high. I would still want to hold the iron butterfly, assuming 397 by the end of the day, though. I'm not sure that we'll hold this this trend line up. Wow, that's an interesting candle right there. A low tick. Somebody must have put it in the wrong order. Yeah, Looks like we're just finding a balance at the trend line right now. I'd say if we get rejected, then we're going to keep headed down. But, of course, I do have a bias to the downside with a put-debit spread on the line. I'm going to set a price alert for the 395.78 mark. Maybe close when we get back to there. If we get back to there, I should say. So create an alert with that drawing. Cross below. But we still have a pretty decent way to go. About $1.60. On a day like today, you're not going to get that much volatility that quickly, I would think. But let's see if there's any other news that's dropping at the moment. Biden Chief of Staff Zients is nearly wealthy enough to buy the entire White House. Oh man. Yeah, I mean all of Washington D.C. is probably wealthy enough to buy the entire White House. Dividend stock ETF has a 12% yield, beating the S&P 500 by a substantial amount. What is that? I wonder. JP Morgan Equity Premium Income ETF. It's probably a covered call ETF. If it's by JP Morgan. Yeah, JP Morgan Equity Premium has been able to take advantage of rising volatility in the stock market to beat the total return of the benchmark S&P 500 while providing a rising stream of monthly income. So if we look at JEPI, it's probably a covered call fund, if I had to guess, based on the word premium in here. But the problem is, whenever the stock market goes up, like you're seeing right now, with it up by 0.5% today, the premium income is not going to perform as well because you're sacrificing growth whenever you're selling cover calls. So that is the drawback of these strategies. If you look at the past 5 years, actually it started in May of 2021. This is up by 10%. Let's see. It's based on the S&P 500. So if we look at 2020 to current, it's up from 337 to 397, so about $60 or 20%, versus JEPI only up by about 20%, or sorry, 10%. So that is a sacrifice that you make whenever you do these income strategies with cover calls. You sacrifice growth, but in the downside, it does reduce the volatility because you're bringing in some extra income. Not sure the way that they structure it, but the best way to really structure these kind of funds, from what I've seen, is to have to sell half of the shares whenever you're doing cover calls. So if you have, say, 200 shares of the S&P 500, or if you have 200 shares of QQQ, whatever index you want to choose, then you can sell cover calls on 100 of those shares instead of the full 200, and then you won't sacrifice the growth whenever the stock market goes up a ton. So that's why something like QQQX, another one of these cover call funds, has done significantly better. It's only down by 6%. Versus something like QYLD that just sells cover calls on their entire fund. So this one is down by 33% because they gave up all of that growth. You get a 12% yield, I think, for QYLD, if I remember correctly. So about 1% a month, versus QQQX, you only get about an 8% return per year. So about 0.75% in income. I'm still adding QQQX personally to my portfolio. Looks like we just tagged that 398.5 mark. So we might be headed up some more. Looks like we caught a bid or bounced on that trend line once again. So I think I'm going to head out of the put debit spreads. Everything looks pretty bullish this morning, even with the 10-year Treasury yield, I guess. And the markets just don't care about Treasuries anymore. It's out of sight, out of mind. And then the dollar is still up. So the fundamentals are screaming down, but markets and the technical analysis is screaming up. So for me, time to get out of the put debit spreads at a loss. Let's see. All right, so they're going for 13 apiece. I bought them originally for, let's see, 38. Try to close them at 14 if I can. I opened 10 of them. And if we check out the studies, I'm sure the RSI is probably getting overheated at the moment, if I had to guess. If we look at RSI, it's currently at, above 70, so overbought, but just because it's overbought doesn't mean that it's going to immediately sell off. RSI is a better indicator of sentiment, so if it's above 50, that's bullish. If it's below 50, that's bearish. Obviously, we're above 50, so markets are bullish this morning so far. Could be a pivot later on in the day, but given that there's no economic data coming out, I wouldn't be too certain on that trend turning around. If anything, let's see. This trend line is going to be the major focus for people today. I got filled on 3 of the 10 put debit spreads that I'm trying to close at 14. Throw this in the premium Discord. There we go. Got them out at 14 each. All right. Closing options alerts. Premium 101. Just cut losses on the 395, 396 buy put debit spread that expires today, 123 at how much each? 14 each. Okay. Originally opened those at 38. Let's see. So originally opened 10 at 38. So 380 minus 140 for a $240 loss. Type that over in the drive right quickly, and then I'll also put in the iron butterfly that I opened with that one as a hedge. So we got that set for today's expiration date. SPY put debit spread, that is a bearish strategy. Expiration date was today, so it was a day trade. Let's see. Strike price that I chose was 396 for the long, 395 for the short. Opened 10 of them at 38, closed them at 14. So $240 loss. And then also opened SPY, both iron butterfly, which is a neutral strategy. Expiration date is also today. Strike prices that I chose was 394 and 400 for the longs, 397 for the shorts. I opened just one of them at a credit of 188. I'll type in the expiration date for today. And this one did not expire. I closed it by myself. And I'm still holding on to the call credit spread that I opened last Friday, assuming that Q's is going to be under 281. So even if we do drop after, this decent rally, still got some money on the downside. So not entirely lost, but let's see. Good morning. Do you think if earnings come in positive for Tesla, this might hype investors up and make Tesla increase by a lot? I think that Tesla is going to have a small beat on their earnings per share. It's not going to be major if I had to guess, though. My guess is that it's probably going to end the week below $141. I've already taken on a trade accordingly. I do expect them to have about a 2-cent beat. So it is going to be a beat nonetheless, but I don't think that it's going to be that positive for their stock because usually Tesla beats by a pretty large margin, which they won't have for this quarter. So if I had to guess, Tesla will probably come down. The stock has already rallied a good, 30, 40% over the last month. It is down by probably a good, 30% also from a month or two ago. From December 1st, it is down by roughly 30%. So could be a little bit high, could be a little bit low. My guess it's probably a little bit high, and they're going to do well in earnings, but it's not going to result in much more upside. UBS adjusts price target for Tesla to $220 from $350. Oh my god. So they're still expecting the stock to go from 140 right now to 220. I wonder what their time frame is. If their time frame is a year, it's just stupid. It's like a 50% rally in the stock that they're expecting, which for 2023, probably not going to happen during a recession, if I had to guess. But, Wall Street, they love to give reckless numbers. Troist Securities maintains a buy, price target at 245, 220 at UBS. So all the price targets are way overhead. So that's probably what's giving it a little bit of hopium and why it's up by 4% today. Let's see what other news we got. Elon Musk headed back to court over Tesla tweets. They don't leave that man alone. He's got to have some of the best lawyers, I bet, as much as he's in court. But yeah, not really much news outside of the price targets and then headed back to court and then people giving their analysis for earnings. Visa's down. Visa's the only one down on the earnings watch list today by 0.3%. That's interesting. It's getting closer to that 220 mark that I'm assuming it'll be below. Kind of wish I had picked up the put option this morning, but that's alright. Yeah, brokerage that I'm using. Well, the charts that I use is Thinkorswim, and then the broker that I use to trade is Robinhood. Currently 17 cents for those put debit spreads, so I got cheated out of them a little bit cheap, but the Iron Butterflies basically break even at this point. QQQ called debit spread or called credit spread down by 120. The Tesla call credit spread that I didn't mean to open, but I did anyway. Currently down 85. I got those for 26 each. Now they're going for 40. So this is why I wish that I had waited. I could have got them for a much better value than what I did. I could add to the risk on it, but I already said that I only want to put down like 400 in risk, and I already put down 350, so not really too reasonable to add more to the table here. So I'll just leave it as is. And then Tesla comes down after the earnings report. That would solidify that. Oh, looks like gold is moving down today. The gold leaps call that I have is down by 3%. What is gold up to? I haven't seen it yet. I guess with the dollar going up this morning a little bit, gold is going to come down with that. But it's trading at down 0.67%, 178 at the moment. So that means that the cover call that I sold is doing okay. Let's see what the total returns are. 763 for the leaps, down by 50 for the cover call on the leaps option. It might be worth I'm kind of thinking about closing the position altogether on gold. I still think that the dollar has some room to improve, some room to come down, especially after the next Fed meeting on the February 1st. I think the dollar is going to come down even further if the Fed does a 25 basis point rate hike, which they are likely to do. It's what it's seeming like. So I guess I'll hold this into February 1st. I would probably want to get rid of the cover call, though. And right now it's only down by 50 cents. I would still make like $700 a profit, even if it gets assigned and gold is above 181 on my expiration date for February 10th, which I'd still be happy with $700 a profit. But I think gold could trigger much higher, especially going into a recession with the dollar coming down more because the rates coming down. I think that's a setup for gold rallying higher in February. So I'm going to just make the decision to close the gold cover call at a loss and then hold the leaps option for February 1st and after that. So 1.4. I'm buying to close this, so I need to buy it at the ask price in order for it to get filled. I typed in the wrong price. I typed in 120 instead of 142. 142. Buy to close. Gotta wait for the contract to be available. It should be available. I'm not sure why it wouldn't be. There we go. 142. So this will be a $50 loss. But don't want to sacrifice the gold gains for after the 25 basis point rate hike for February. Do I think that Microsoft will beat on their earnings? I think that, let me see. I did the analysis right before you came in, but I'll check in on it. Closing options alert. Premium 101. Just cut losses on the GLD 181 cover call that expires 210 at 142. Poor man's cover call. GLD 181. Originally opened it at 93. So that one was a 50-ish loss. 142 minus 93. 49 on the loss there. All right. Dipping below that 31,000 mark. Down 600 today. Where is it coming from, I guess? The today return. 144 from the call credit spread. 118 from the gold call. And then a little bit out of that iron butterfly, but I'm still holding on to that. Still think we're going to end below the trend line. I think it's going to, if there is a pop above the trend line, I think it's going to be after earnings, not before. I think that earnings is basically the big decision maker on whether the stock market is going to go up or down. So I wouldn't trust this break of the trend line just yet. But yeah, looking at the economic data that's coming out this week, we got manufacturing PMI tomorrow. Expected at 46. Last one was 46.2, so slightly worse is what's expected for this month. Services PMI at 45 versus 44.7. Interesting. They're expecting PMI to come in slightly better for services. It'd be interesting to see if services comes in worse than expected, because services is where inflation is really kind of sticky. So if purchasing managers for services think that the economy is going rough, then we might see disinflation in services, possibly. But yeah, we got services tomorrow. We got GDP on Thursday, initial jobless claims on Thursday, core durable goods, so lots of volatility expected for Thursday. And on top of that, you have PCE, or the Fed's favorite measure of inflation, coming out Friday. So that's going to be, the volatility is going to be on Thursday and Friday. We might get a little bit of volatility tomorrow with the services PMI report. Now, the way that I would think about it, if services PMI comes in worse, we would probably be bullish, because that means, again, disinflation for services, which people will think is where inflation is sticky. So if we go to, I do want to check the earnings calendar first before we make this, just in case there's any major earnings that could shift sentiment today after hours. We got Logitech, Crane, Zions, First National Bank. So no major companies are reporting earnings, basically. We got Verizon tomorrow morning, and then Johnson & Johnson. So I wouldn't say any of these are significant enough to shake up the markets in one direction or another. So based on disinflation for services, I think markets are going to be positive tomorrow. Now, hard to say where we're going to be, because we're above the trend line, and I think we're going to be below it by the end of today. So maybe I'll do a put credit spread rather than a call debit spread. Call debit spread would be less risky in terms of risk reward and how much I have to pay for it, but the put credit spread would be more on the safe side. Let me compare the two. Let's see which one I like better. So expiration date for this is going to be set for tomorrow, which is the 24th. If we assume it'll be above 401, we're paying 37 cents, which I feel like it's too much for it. But if we sell a put option and do a put credit spread instead, let's say it'll be above 394. Probably not going to have a great risk reward on that either, because the strike price is like $5 below where we're trading right now. Yeah, the credit for that's only 12. We could say over 396. That one I'd be a little bit worried about, but let's see. We might be able to meet halfway at 395, but let me see how much the 396 is going for. That one's only going for 20 cents in credit. In my opinion, not really worth it. And then if you do a 397, 396 put credit spread, you get 27 cents of credit. So none of these trades seem very worth it in my opinion. So I guess I just won't take that opportunity. 400, 401 call credit spread. Maybe if it expires today, that would be a good trade. But I can't imagine you would get a decent credit out of it. Let's see. If you do a 401, 402, you get... That's not right. I'm looking at puts there. 401, 402. You'll get $16 in credit. That's actually not that bad, considering we're trading at $3.99. If you do a 400 401 call credit spread that expires today, you get 28 cents. So you get about double the credit for going a strike price lower. We're already up by 0.8. Fundamentals are still pointing down with the 10-year, up by 1.1% to almost 1.2. The dollar UUP is still trading at 27.50. So fundamentals are setting down, but technical is staying up. So I probably just wouldn't take a trade on it, just because technical analysis is telling me not to. Well above 70 on the RSI now at 81, so definitely overbought, but just because it's overbought doesn't mean that it can't continue. But yeah, Microsoft earnings, MSFT. Let me see. I thought I had taken the notes on here, but I guess not. Which means that I have to go back and do it again. Did I do it for Visa? Let's see. I swear that I did an earnings analysis for Microsoft. I'll have to rewatch this. But yeah. I did an earnings analysis about 20 minutes into the live stream, so once it's done, you can go back and watch and see my analysis. But I think it was slightly positive, so probably a put credit spread, and I would assume that it would probably be above 235 would be my guess. But we're already up like 0.8%, so you're not going to get much credit out of that anyway. But yeah, I think that's all the trades that I'll be making today. I'll check on the put credit spread. 235. We'd sell the 235 put. By 230, you get $122 credit. You risk $377. It's an okay trade. Maybe we wait for tomorrow though, and you'll probably get a better credit if the markets pull back for any reason. But yeah, that's all the trades I'm making today. It's 10:25, so I will head out, and I will catch y'all tomorrow morning at 9:30. We'll check to see if I have all the trades written down, and that will be the end for today. So go into the January log. Didn't open any new ones that I know of. Let me double check though. Discord. Oh, I closed the cover call for GLD at a $50 loss. So that one closed today, and I closed it at $1.42. So that one marks out to a $49 loss. Need to get the PL on this. And then let's see, still have the QQQ call credit spread, still have the Iron Butterfly that expires today. So we'll see how those two end up. And I will catch y'all tomorrow morning. See you, everybody.